One of the things that we heard a lot about during the pandemic was people talking about Bitcoin, and we heard, Elon Musk being able to make these investments with his own money. So there was a lot of attention around, man, these wealthy guys, they're just not paying any taxes. What they're leveraging their businesses, right? So I wanted you to talk
Right.
about that a little bit here, which is the idea of you own a business, you have some assets, and you're borrowing perhaps against those assets, but then you're not paying
Right.
taxes on that. So can you talk about that to maybe like as if I'm a 5-year-old?
Sure. So imagine that you've got stock in Tesla.
Hmm.
Okay. So your stock in Tesla is worth $5,000. Well, that stock will go up and down, but it's pretty stable. So the bank will typically lend you 50% or half of the value of that stock. So they'll lend you $2,500 for that $5,000 investment. Well, that $2,500 loan isn't taxable because it's really not your money, right? It's still the bank's money. So you're going to have to pay that back, but in the meantime, it's not taxable. Well, you can keep doing that throughout your lifetime. What the rich people do very successfully, like Elon Musk, although he's paid a lot of tax in the last couple of years, is rather than sell their stock, they just borrow money and use their stock as what we call collateral, which is they pledge it, meaning that the bank, if you don't repay it, the bank gets the stock, right? So the bank's very happy because they've got a very secure asset that's easy to turn into cash, which is what they want in the end. They're only lending 50% of the value. So if you don't pay, I mean, you give up 100% of the value, they get more than what they loaned you. So it's a good deal for the bank. They get their interest payments. Your interest payments, by the way, if you use that money for investing in real estate, it's deductible. So you get that tax benefit. So all of this kind of works together to, really everybody's benefit.